Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. That still shot of me is me, everybody. I am here live. Glad to be with you all. Today, I'm joined by my friend and fellow Schwab coach, Mr. Brent Moores. Good morning, Brent. How you doing?
Hey, I'm good, Kevin. Good to see your snapshot in time there. I'm glad to be here with everybody today. We've had some interesting markets the last couple weeks, and no different today.
That's the truth. Yeah, very interesting market, a little bit of volatility, and we'll try and see if we can't put some understanding to what's going on in the market via the charts today. So we got plenty to get to as always. You can say hi to Barb Armstrong in the chat. She's going to manage things for us here today in terms of questions that come into the Q&A spot. Make sure you're posting in there for the show, everybody. We go about 45 minutes in total. We're happy to hear from you. Brent and I will certainly keep an eye on things and work to bring your questions and comments to the discussion where we can. So please post in there as you'd like. Don't forget to follow the three of us on X: Kevin Horner, CS, Brent Moores, CS, and Barbara Armstrong, CS. We try to post there for you throughout each week, and when we're not hosting classes, if you're looking for a place to engage with us, you can always reply to the posts we make on X. We're happy to hear from you there as well. So make sure you're following us. And lastly, please make sure certain you're subscribed to the YouTube channel as well. We call it Trader Talks. Now, with that, let's get to our disclosures, and we will jump to the chart. So first of all, please keep in mind that all of our discussion here is exclusively for your information and your education. We do not make recommendations nor endorsements for any specific approach to trading the market. We do, however, discuss technical analysis. We use that to analyze the market broadly. Here we're looking at the charts, and we try to drop in nuggets of insight, technical analysis, concepts, and strategies traders may choose to employ. But remember, we do not encourage you to make decisions exclusively based on what you get from technical analysis. It can be a good decision-making piece, just not the entirety of it. If you're new to our show here, this is our agenda. We take a top-down review of the market. What that means is we start with our broadest of indices. We'll look at the S&P 500, the NASDAQ 100, and the Russell 2000. We'll expand to some industry groups, sectors in the leadership positions and laggard positions as well, before getting to stocks in the news also. So that's what you can expect from us today, and we always get started here with the S&P 500, the SPX. Brent, the thing that I've been talking about most recently is the fact that we just can't get our mojo back in terms of short-term trend. We've been now below the 20-day moving average for 17 of our last 20 sessions. Numbers-wise, that doesn't sound great, but I think the key component when I look at what's going on in here is that there is limited action that tells me any time frame has an uptrend in play, meaning I've got lower highs along the way, at best matching lows. So it kind of feels at best like the S&P is neutral, and yet I'm not feeling very neutral about this market, Brent.
Yeah, well, I'll tell you what, those two moving averages, your 20 and 50 day, are kind of sticking out like a sore thumb there, Kevin. The crossover that we had on that's just not a great sign, number one. Number two, for quite a while, we were looking at this channel, and we were looking at these lows that were around the 6,800 level or something like that. Yeah. And we kept getting closes that would keep that in check. It would keep it in play there for a while. And then just recently we broke down below that. And so we're kind of right on the edge of that. Is that going to hold, I guess, is the question here on this. It's just if you look at the grand scheme of things, it's just been this kind of slow rollover on the SPX. It's kind of holding up thanks to a couple days ago, I guess, but yeah, it's not feeling very bullish. It's not feeling very neutral even right now to me, because that shorter term trend we've been getting lower highs, lower lows, as you said.
Yeah, and Brent, what's tough about that is I think that we traders tend to lean towards optimism, right? We want to be bullish, and we've got a history of broad markets that validate that
Yeah.
approach. And yet, this is one of those windows where maybe it's not conducive to our trading to be as optimistic as we want to
Well,
be. It's entirely possible for many traders out there, Brent, to just be sitting on their hands right now with as much certainty as they're dealing with.
yes, and that's one of the distinctions between trader and investor, investor being longer term. In the long run, historically, markets have gone up. S&P 500 has gone up, over many, many years. And of
Mm-hmm.
course, it's had shorter periods of where it has fallen. And sometimes those shorter periods can be longer than a few months. But so that we kind of do have this built-in optimism there. But it doesn't mean it's going to go up in the shorter term. And the shorter term you time frame, the closer it becomes to just like, hey, it's a coin flip almost whether it's going to go up or down during a shorter term time period.
Mm-hmm.
And hey, if this is Trader Talks and we're talking about trading, we're looking at a shorter term trade that may, for a lot of traders, may consider the market to be more bearish right now.
Yeah, and that's perfectly appropriate. One of the additional concepts that I like to remind traders about is that we don't have to take what we think to be full positions, especially in choppy markets. It can be difficult, but you all know that I speak quite a bit about the idea of layering entrances, layering your exits, stepping into pieces of your trade, getting validation, and then adding to it. Those are steps you can also take that'll aid your process a little bit. In instances where we're wrong about our entry, which seems to be a little more frequent now than recently, then it's okay. We're taking smaller losses, of course. If we are right about our situation and we've got longer term trends developing, that's cool. We can always add to winning trades. I know that not everybody likes to pay a little bit more when you're buying your positions, but remember, if you're a trend trader and you're buying at higher prices, it's because the trend is still playing out. So it doesn't necessarily mean averaging at lower prices. It might just mean averaging at higher prices and riding the trend a little longer. It just takes a different process. So as we often say, Brent, it's important to plan our trades. It's also important to be a little nimble and change your process a little bit when the market gives you reasons to do so.
Yes, and just keep in mind the market is not just about trying to time, like, an entry or time an exit necessarily. It's also about risk management. It's also about just trying to find the relative strength of the market or the trend of the market, or
Mm-hmm.
other things like intermarket analysis. So there's a lot of different things of technical analysis. Now, on this chart right here, we do have that 200-day moving average. To me, that seems like kind of a significant level. And that could be one of those trigger levels where people may, consider it to be a key level. Now, that doesn't mean if it breaks below there, all
Sure.
of a sudden it's going to go way down or anything. It's just a level where some people may take action, for example. And we're not that far away from it. And it's creeping up as the market's been kind of going down a little bit. So looks like the two may meet in a little bit, unless the market has a pretty strong recovery here.
Yeah. You know what? Yesterday, Brent, we had exceptional moves tied directly to oil. I'm going to bring in
Yes.
oil right now
Yeah.
utilizing the futures symbol. Remember that futures carry a higher level of risk. It's not really an appropriate trade approach for all traders. Make sure you go through your requisite steps if you do wish to trade futures. We're going to utilize it just from a standpoint of what was moving yesterday, trend. And yesterday's price action was largely tied extensively to oil, Brent, because there was a late afternoon tweet that suggested that we were seeing an improvement in the Strait of Hormuz, meaning we had seen more ships come through. They had been maybe escorted through safely, etc. That actually was a false tweet. The market reacted favorably and oil sold off when that tweet was then eliminated. It was actually deleted from Twitter. It went away, and then the market reacted to that. And so clearly the pressure on the S&P in the last 10 days is almost exclusively tied to oil here and the uncertainty around the barrel.
No doubt. The war and, more generally, and oil more specifically, really can drive the market right now. There was the tweet you mentioned. There was also 3 carrier ships that were hit, one in the Strait of Hormuz yesterday and a couple others that were on the coast of Iran, which isn't helping the price of oil, I'm sure. But then on the other side, the US and I saw Japan as well have talked about releasing strategic petroleum reserves, which would tend to help the price of oil here. But ultimately, when we talk about the SPR, it's not a long-term solution, right? This is all going to be dependent on how long the war lasts. And I don't know. I'm no expert on that. And that's ultimately going to probably have a big factor on the price of oil. But to your broader point, this is what's going to affect the market for the foreseeable future is what it appears to be right now. And yeah, we had that big spike. I don't know if we're going to go back over the $100 level or not, but mid 80s is a lot higher than it was, a month ago.
You're not wrong about that. I mean, it's been an extensive rise. I think it makes sense to keep an eye on that ledge I drew, and that's actually 98 or so. But $100 a barrel is a pretty significant level for a number of key reasons, not the least of which is the round figure that it represents. So certainly, oil, any spikes in oil is going to absolutely hinder the S&P. It's going to hinder the broader markets as well. So if you want to keep an eye on anything, it's maybe a combination of the barrel price, the volatility index, the VIX, the S&P intraday. Looking at those 3 in conjunction with each other can be a little bit helpful in understanding the current makeup, or rather the current bias of the market. And it's important. Many of you are already commenting. You know the deal, everyone. This is a headline-driven market. What that implies for us is the risk with us believing that the price levels that we validate are the ones the market cares about. Unfortunately, there's no way to validate that because the headlines carry more weight than the actual price action. So it's really, it's not the tail wagging the dog necessarily, but it's kind of close to that. So be disciplined, maybe take those smaller positions like we talked about until you get some clarity from things here. Unfortunately, the one thing we don't have, Brent, is clarity. We could say maybe some clarity as it relates to the NASDAQ 100 here, Brent. If I just exclusively went with my 50-day, you can see we've been below the 50-day since February, basically, since the beginning of the month. It's not been a good last 5-6 weeks for the NASDAQ 100.
Yeah, it hasn't. And that has been, even aside from the war and oil, NASDAQ has been struggling more than the S&P 500. And we're below that, we're below the 50-day moving average, and we'd be below the 20-day too. So more struggles here, but kind of a shorter term, if we're looking real short term, that channel is kind of significant. So we'll see if we can stay within that channel or not here for a little bit and maybe ride out some of the volatility in the news. But, the NASDAQ, for the most part, it's going to be rare to see the NASDAQ do very well and the S&P 500 not do well. So we'll just see what happens. And let me just make one correction. I think I said,
please,
I said carrier. Cargo ships were what hit. They weren't tankers, as I understand it. They were cargo ships that were hit. So I may have misstated that. I saw some chatter in the chat there on that. So just a clarification on that.
Always good to get our thoughts accurate, Brent. I appreciate that. I'm noticing also we had a survey link in the chat, everyone. I know that's going to get reposted for us. Brent and I would always appreciate hearing from you, so please feel free to share your thoughts, your ideas about the Trader Talk segment here. Always ideas on what we can do better for you going forward. I saw some questions for some individual stocks. We'll certainly have a couple of those reviewed for you today when we get towards the latter portion of the segment. So be aware if you want to stick around for those. We'll get to stocks in the news as well. We're just kind of keeping an eye on things. Again, the reminder, I think, as you said, Brent, ultimately that 200-day moving average calls out here as an area of short run support. Everything we can use from a technical standpoint to tell us anything right now is basically looking at the 50 and the 200-day. Above the 50-day, we can talk about continuation of the broader long-term uptrend. Below the 200-day, it becomes a likely risk-off situation for many a trader, taking dollars out of NASDAQ or tech-heavy investment. We'll see how that plays, though, if we get down and test that 200 once more. I will point out, Brent, I know I just got done saying you can't really rely on the technicals, but there is a bit of a bullish divergence with that RSI, and we've had that ledge near the 200-day kind of tested. This is maybe telling us from the technical standpoint, if I didn't have traditional headlines, I think a trader would look at this and say, okay, that kind of validates that support we've hit down here over the last month.
Yes, and this really shows the difference between technical analysis and what can happen in the market. Right now, the positive divergence is it's considered to be a bullish divergence. Whether we're talking bullish or bearish from the charts, trend, support and resistance, indicators, clearly this is a news-driven market. And in fact, I saw a meme the other day on X where, how stock used to be, and it was, the used to be looking at charts and things like that. And the new thing is, listening to the president talk or whatever, or the news related to what it is. That's how we're looking at the markets right now, because, we're always to a certain extent a news-driven market, but there's times where we're really driven by news, and we are in one of those heightened levels of news-driven markets right now, which ultimately may be. And the sad thing is that's more, just by definition, it's news. It's not something that we can know right now.
That's the truth. But not to worry. We're going to still be here 4 days a week for Trader Talk, at least at Market Open. Still kind of hashing this stuff out with all of you. So hopefully you'll join us for those segments as we go forward here. Let's look at the small caps, Brent. Small caps have been a little bit more beaten up here. This has got the makeup of a bit more of a bearish chart. Number of key levels that we've fallen through. Horizontal support most recently here, and then I'll call out, of course, the 20 crossing the 50 to the downside. So we're looking at a bit of a short-term trend shift potentially.
It is. Now, the small caps had of late been actually outperforming the large caps. So maybe, I don't know. I'm not sure. I'm not sure profit taking is the word, but maybe it's a little bit of a makeup for outperformance over the past few months over the large caps right now. But it's slipped down. You can see the channel that we're kind of in now. That would be kind of a key break if we did break down below. I don't know exactly what level that is, about 2470 probably, or something like that. And then we have the 200-day below that. So we'll see if that bounce, that low. On a lot of these markets, we hit a low a couple days ago. And if that low can hold, the shorter term low at least, if that low can hold, that's a good sign. We'll just have to wait and see.
Yes, we will.
And clearly, by the way, sorry, I was just going to follow up.
No, you're fine.
Look at the RSI compared to what we saw in NASDAQ here on that Russell 2000. Very different look here on the small caps from the NASDAQ.
I'm glad you called that out, because that does look very different. This is clearly in a downtrend off of the most recent peak. RSI extending down into that below 40 level. We're getting dangerously close to the 30 level for oversold conditions. And, that's that's not a shock with the kind of pressure we've seen here in small caps. I did like one of these comments in the chat about, is this a news-driven market or is it maybe a rumor-driven market? It'd be hard-pressed to argue with that. Obviously, if we've got erroneous tweets or tweets that are suggesting one thing that are completely false, it's difficult to say the least, Brent. We don't necessarily know what we can validate and what we can't. It's very frustrating, I'll admit. So once again, I think, Brent, it's important that we are always properly positioned. Otherwise, we put ourselves in a maybe more risk than for which we have comfort.
Yeah, no, good point. It is the way the news cycle is now. It's, we're not waiting for traditional news sources to react to the market, but we have social media, which is immediately putting out information, true or false, out there that people can react to. So it's different world these days.
That's the truth. Unfortunate, but true. Brent, we're looking at the semis here. I'm going to draw a manual line through support basing on our most recent lows. Maybe, that's a trend line that could be validating. But the thing to me here, Brent, with the semiconductors was a good bounce level. Again, news driven, but a good bounce. The trouble is we bounced into a lower high to this point. I was really unenthused by yesterday's candle on the SOX here. Through the 50-day, beautiful and green in the morning, and then by the afternoon it's looking like a dragonfly type of a doji here, opening, basically closing where it opened after trying to be bullish all darn day.
Yeah, just a reminder on candles that it's not so much are we up on the day or down on the day, although if the market is significantly up, we'd consider that bullish typically, but it's where the final price was as compared to where it traded throughout the day. And if, like we saw in yesterday's candle, you had a range for the day and we ended up closing at the low of the day, or close to it at least, even if we're higher than the previous day's close, a lot of people would consider that to be kind of just not a great sign for the market. And vice versa, by the way, if we have a big trading range and we close near the high of the day, even if we're lower than the previous day's low, that would be considered to be a little bit more of a bullish indication on it. But yeah, I can see why that is wasn't encouraging. Hey, we're up a little bit today, so that's a good sign here, and we're right at the 50-day. We'll see if we can maintain that.
Yeah, here's how it looks on the hourly bar, everybody. This is where it kind of stood out to me. I've drawn all those lines I just drew on the daily are the same ones you see here. But look at the bounce back right into this gap zone here. This is the 137-hour moving average. I know that sounds kind of silly, but that's basically half of the time frame associated with, so 52 hours is kind of like an 8-day moving average approximately. So that's what that pink line represents. But again, falling through support, bouncing right back to what was support, potential resistance. Need to get kind of above that zone here. So I always enjoy going to these shorter term windows, looking at hour-long bars, 15-minute bars. It can be kind of instructive for us. The transports, of course, Brent, have really taken it on the chin with the oil prices jumping here. You'll see we made a significant drawdown under the 50-day moving average. It looks like we've still got some work to do to figure out where our bottom is in the short run. Clearly, trucks taking it on the chin along with airlines due to these higher oil prices.
Yeah, just a reminder to everybody, transports are often considered kind of a leading indicator in the market, and if you think about, there's a reason why, for our economic activity, a lot of it depends on shipping, whether, no matter the means, whether it's by rail or truck or whatever. And so if that's dropping, that's not a great sign. Of course, oil prices can impact shipping costs, and that's not good. And so that is probably, I would say, a fairly direct correlation here on that. But the drop here, a lot of traders would consider that to be not bode well for the market. Now, the counter argument is this, is the economy is different than it used to be. It used to be more of, an economy that relied on that and less of a services, a technology type economy. So maybe it's a little less so of a predictor than it used to be, but still not a great sign here when we look at transports. We can look at transports and compare that to the SOX. They're kind of going different directions, but right now, this is, as you mentioned, it's not a great sign below that 50-day moving average.
Yep, that's unfortunate. Yeah. Oh, that's interesting. Let's get off of United Health. Brent, let's move into a look at some of these sectors that are leading. In fact, rather than going through the sector list here, first of all, let's just peek in on our MarketWatch tab and see what our leadership looks like this morning. We've got energy at the lead here with a little bit of a bounce as we saw. We'll see it again on the chart momentarily. But Brent, it stands out. Tech, discretionary, communications leading. These are red groups year to date, but maybe turning the corner a little bit. I noticed that the relative strength over 5 days has been really strong, obviously, in the communications and in tech, implying perhaps, as you'll notice over the 63-day windows where they've been really struggling, maybe these are turning a corner, perhaps.
Yeah, that is interesting. And, you can look at what's happened, and it's not surprising that for a little bit longer period of time. I mean, energy and oil prices were going up even before the whole war broke out. So keep that in mind. But IT and by the way, utilities have been doing great this year as well. And some of the more, say, defensive type sectors have been doing great. But IT had been getting beaten up. And so a little change in that front. Were they a little bit oversold maybe? Was there a little bit overreaction to the whole, was software over, which is in terms of IT, the biggest, the victim of the sell-off. Software has been really getting crushed this year. Maybe that's priced in at this point, and maybe it went a little too far. And so we have seen a little bit of recovery on some of the software stocks, ultimately on these IT stocks here that we're seeing. Maybe it's catching a little bit of a bid there, huh?
It's such a difficult thing to really ascertain here, Brent, because we've just got done talking about the struggle. And the chart doesn't look wonderful, but I have a bullish divergence with RSI. We clearly set horizontal support in this sector here based on these lows we've seen now over the last month. Those have been held. And when I say bullish divergence, this is what I'm talking about, everybody. We've got the relative strength index line that was at this low level when we first got down to this price. And then we come to this price again weeks later, another week later, and we see that the RSI is giving us higher lows. So we would call these relative higher lows, even though price made matching lows. So this is one of those scenarios where a bullish trader would look at this and say, maybe this is the development of a potential short-term bounce. Doesn't mean it has to play out, because again, we've got plenty of negativity that we've been talking about, unfortunately. But I have to call out, Brent, this is the kind of thing that some bulls would look at as a reason to be optimistic, and they might start planning trades around the potential for a break.
Yes, and we're right at this precipice, if you will, of that. If you look at the upper trend line, look, it's either going to bounce down from here or it's going to break through at some point.
Right.
And that seems to be a key level, because that's a trend, that level that we're on the upper end of the trend, but we still haven't broken the series of lower highs here. And if we bounce down from here, that's actually just a confirmation of more lower highs on this. But if we break above, the first line of defense, so to speak, is the trend line that you have in white that you've drawn there. We also have a 50-day moving average, and we also have a high that occurred maybe 2 weeks ago, something like that. That would be kind of the next level there as well. So there's multiple resistance levels that we could look at, but there's a few just kind of right in the same area. And when you converge in the same area, that tends to be perceived by technicians as a strong level and an important level. And I don't know if we're going to break above that, but if we do, a lot of technicians would consider that a great breakout at this point.
Yeah, I love the comment about confluence there, Brent. Prices or resistance areas coming together on downtrend line, horizontal resistance, levels of the 50-day moving average is all right there. All of that strengthens the validity of that price. And the reason is because you have traders evaluating different processes and they're all coming to the same conclusion, the importance of that 50-day moving average value around 5,550 or so on this particular index would be or sector, excuse me, would be really positive if you could get through there to the upside. And you mentioned it, since we're in tech, I wanted to quickly peek in on software, see if we're getting a little bit of a bounce. And we've had the bounce, Brent, but we've not seen the trend shift just yet. We are above the 20-day, so we're deciding whether the 20-day can be supportive for us. We're still well below the 50-day, and we've been below the 50-day in software dating all the way back to early November. So that's a lengthier intermediate term trend above which that 50-day becomes important for us. But near term here, Brent, it kind of looks like it could be just considered a breather, hopefully, for the space that's been just absolutely beaten up.
Yeah, absolutely beaten up is the right term there. I mean, we're down probably 30% there, or we were at least here over the past 6 months. So, hey, look, if we're going to get, anytime we're looking at it for a trend change on something, it's got to start somewhere. It doesn't start with the trend change because we don't know exactly how much it's going to drop, or whether it's truly going to be a trend change. But it's got to start with this. And so what we're looking for are higher highs and higher lows. And so the jury's still out on it, but look, it's better than the alternative of it not coming up at all, I guess, at this point. We're above the 20-day. We'll see if we can break through your shorter term resistance line there. And you can see just how oversold it was. Look at that RSI at the bottom of the page. I mean, we're down to 20, I think.
I think that was, you nailed it. No, 17. 17 at the low, Brent.
You only get to 17 on your RSI if you just are getting obliterated, really. Similarly, you're only getting to, above 80 on the RSI if you're just kind of going parabolic up. But in this case, it does look like we are, at least we've recovered a little bit here. But whether that short-term move translates to an intermediate-term move or a longer-term move, that's a different question there.
True. Brent, let's also look in here on our discretionary, if I'm not mistaken. A little bit of a struggle. We've also been below the 200-day for a while. Now we're fighting it out at the 20-day even. That's a little bit of a concern, that we can't get discretionary back into any kind of gear here. This is a pattern that I'm just not commonly used to seeing. Brent, how about you?
Yeah, this is a little bit unusual. And there's, different factors in here. Obviously, just the overall economic situation. We did have a CPI report this morning that came right in line, Kevin. So that's good. It's not bad. But inflation is going to be a concern in the sense that higher oil prices certainly impacts the overall inflation number because it impacts so many different industries and so many different inputs into that inflation number. And if we're already kind of iffy on that and we've just increased oil prices by, 30% or whatever, that's a huge thing. And so I guess I'm not shocked that discretionaries struggled a little bit of late.
No, not shocked, yet frustrated by the fact that I can't make heads or tails of the pattern development. It's really tricky in here.
Yeah, but I'm probably looking at a level like around 1870 or something like that. Those highs that we've hit over the last 2-3 weeks, right in there, right around where that 50-day, 200-day moving average is. And that would be, and we're not that far away from it. Today we're up a little bit today. We're not that far away from, if we could break above that, that'd be a strong technical sign, I think, on that.
Could be helpful for us. Brent, one area that we know was really, really hot in recent months here has been materials. Materials has actually broken down pretty well. What I find interesting, the material sector has broken down well below the 20-day. Now we're 3 or 4 days below the 50-day. This is starting to develop into a potential for a deeper pullback even still. But I thought we could quickly look at the ones that everybody wants to know about. So briefly, we'll look at future prices on gold and silver. Remember, these are future symbols. We're not advocating trading of futures, of course. And again, these carry a higher level of risk, so make sure you know all of those details. But Brent, we've really noticed it's not just gold, but gold, silver, and even copper have started to kind of consolidate after these big runs.
They have, and that's not surprising. After you get a big run, typically you do consolidate a little bit. But I would point out, look at the 20-day moving average on these. There's silver, we're above the 20-day.
Yep.
Gold, we were above the 20-day moving average as well. And
Yep.
So even though we're off the highs, the high was, like, if you look at the high we had right at kind of the February timeframe, beginning of February timeframe, that was really an extreme move that we had on that, where it just skyrocketed up. We came back and we've kind of normalized, but we've been getting higher lows along the way. And as long as that is continuing, or the other way of saying is, as long as that 20-day is continuing to stay where it is continuing to slope upward, I'm not too worried about the price of gold here for gold bulls, but you just never know, I guess.
You don't, but I think it's pretty interesting. That was a 20% peak to trough sell-off in 3 days in the price of gold. That was pretty notable. One of the 20-day, has been good. But you know what? It probably means, when I look at the 20, it might just need a slight adjustment. What if it were a 30-day moving average instead? And you might find yourself a little more capable of sticking with the trend. Notice here, we've actually held the 30-day. I know our friend Connie likes to use the 30-day in her analysis, going all the way back here to November, late November.
Yeah.
Sometimes it's just on us to change the moving average, learn which one is most respected by the institution or the instrument we're working with. And we very interesting, very insightful from time to time too.
In this case, the 30-day definitely has been the one that this is paid attention to more, it seems like, or has been a better indicator, I guess, of where the lows have been. And so one question that often comes up with technicians with trend is, when should I start to worry? When is the kind of the yellow flag? It's inevitable you're going to have pullbacks. When you're trending up, it doesn't go up in a straight line. Everybody knows that. It's going to have pullbacks. When does the pullback become something of a concern and not just, expected routine? And what I would say is, when it becomes out of the ordinary, when it becomes out of the character of the other pullbacks. And so if you can find a moving average where it's kind of adhered to in a sense and hasn't broken below, at least on a closing price, then that may be your first sign of something's a little different this time. Currently, nothing's different this time. We're still holding that, in this case, 30-day moving average.
Yeah, sometimes it's just finding the one trend, the dynamic trend line, in this case, the moving average, that the traders who trade that instrument are respecting as well, right? It can be as simple as that sometimes. So, all right, I did promise we would get to some stocks in the news this morning, so let's do that. We'll lead off with Oracle. Oracle did report overnight last night. JP Morgan today upgrading Oracle. Let me change my chart and get all my details in there for y'all. So we're at the 50-day here. They were upgraded at JP Morgan to overweight from neutral, new target at 210. That's significantly lower, by the way, down from 230. Excuse me, I misread that. So 230 down to 210 following the Q3 report. We had the stock up, but Brent, rallying into the 50-day, way too early to call it a rejection, but the 50-day pretty important for Oracle here.
Yeah, we're right there. And of course, we're early in the day. We have many hours of trading left in the day. So we'll see what happens. And again, news-driven market. But having said that, obviously the market's reacting well to earnings. Oracle had a terrible time over the past 6 months or so. Is this
I
going to
mean,
be
this
the
is a big
change?
move.
Yeah. Is this going to be a change and trend up? Again, the jury's still out. I don't think we can say yet on that, although it's got to start somewhere if it's going to. And this would be a good first step, I guess, on that. And a lot of times, by the way, when support or resistance levels are broken or when trends or changes, it's at key like news events, like earnings typically. And so, this may be the change of something, but it's just early to tell. Breaking through and holding that 50-day would be a good start.
It would. That's a 50 days, a pretty good ledge. As I mentioned here, we've been below it since late October. It's a great reason, again, just from a approach that incorporates technical analysis, everybody. Why would a trader who maybe was excited about the big gap up this stock made back in September, why would they move on from the stock when it broke the 50-day moving average? Well, this thing sold down pretty aggressively just from the 50-day break. It gave up 50%. Now, I'm only able to say that because hindsight is 2020. But as a reminder, this is the type of action where a trader gets more defensive in their positioning, lightening up a position, changing from a full position size to a partial position size based on a shifting risk environment in the underlying equity. So always have a plan. Know where you want to take action. This is a significant move. The thing sold off 60%, Brent. One last note, if I was going to draw a line here, I might use Fibonacci's and see if I could get some, well, darn it if that doesn't line up beautifully. So looks like 185 would maybe be a good spot for a breather if this could stay enthusiastic on the day and the coming days in this news-driven portion. Maybe it can rally up to that 185 zone, but that's a perfectly appropriate spot for a short-term rally to kind of lose steam a little bit.
Absolutely. And
okay.
that's not a surprise. It's not a surprise if a stock moves up a lot, it typically takes a breather. Same thing if the stock moves down quite a bit. If you look at Oracle over the past 6 months as it dropped, there's periods along the way where maybe you would have been very encouraged that it was going to turn around, yet it changes. So we'll have to wait and see on this. But yeah, breather would likely, there's a good chance we'd see a breather as we hit near that 185 mark.
Now, I'm bringing this last one here, everybody, a little differently. But this was not in my makeup of notes this morning because this is relatively new news. And it's that NVIDIA is investing $2 billion in Nebius, NBIS. I'm starting out with the position in NVIDIA, which is actually bouncing well off of its 200-day moving average and possibly working through the confluence, Brent, of the 20 and the 50, which would be really significant to the upside. Could give us a chance to challenge those prior highs. But look at the move that this $2 billion investment is giving in Nebius here, moving to new short-term highs. Brent, this is the highest we've seen Nebius since November of last year.
Yeah, well, Nebius, $2 billion is a lot more for impact on Nebius than it is on NVIDIA, but that's a breakout. If we can hold on that, that's a key level. Whereas like with NVIDIA, I just look at the overall trend and it's kind of been sideways there. And I don't see any reason on NVIDIA to think that that's necessarily going to change. We still have, it's a positive. I'm not trying to downplay the move up. It's a nice move up above the moving averages, but that ultimately we can still go up a little bit and still be in what I would consider more of a sideways trend. Nebius, different story, potential breakout.
Yeah, look at the long range chart here on NVIDIA. It kind of shows you what we've been talking about, which is ultimately a consolidation window, which makes a lot of sense given the nature of the up move. I mean, just off of the low we made on Liberation Day to the peak we just made here late last year in October, that's 145%, Brent. So you're going to get some digestion over the coming weeks and months, and that may very well be what's going on. This white line here, this or light blue, that's the 40-week simple moving average, everybody, pretty darn close to the 200. So that's why you're seeing maybe the trend support kind of maintain in here, Brent. So pretty interesting look, though, at one of those huge positions that really just hasn't gone anywhere over the better part of the last 4, 5, 6 months.
Yeah, just highlights the difference between looking at different time frames and how a longer term chart can tell you more maybe about longer term, and the intermediate term chart is kind of more pressing in what we're looking at right now. And they're not, I want to say they're in conflict with each other. They're just telling you different stories right now. So we'll see ultimately what happens. But for the shorter term trader, I'd say looks like we have a channel here right now.
Great stuff as always, Brent. Love having you on a Wednesday. Thanks for sharing your thoughts, your insights. Let me hit all of our reminders for all of you viewers here. We have a survey link in the chat. We'd appreciate your feedback. Click that link. It's all of 60 seconds of your time. Any comments you leave come directly to us. We'd appreciate hearing from you. Hit the thumbs up button down below. We're going to get this reviewed into the archive. That'll help us out on the replay. Follow the three of us on X, Kevin Horner CS, Brent Moores CS, and Barb Armstrong CS. The best way to find us when we're not hosting for you here. And finally, make sure you're subscribed to the YouTube channel we call Trader Talks. There's much more to come from us for the remainder of the day. Live content all day long. So with that, we'll wrap it up. Have a fantastic Wednesday, everybody. We look forward to catching up with you again real soon.